Morning, everybody. My name's Andy Steele, and I'm a director at 360 Chartered Accountants. We're about to start our latest Saturday surgery, and I thought I'd just do a quick recording about some of the things we'll be talking about for those people that can't make it. We've been running our Saturday surgeries for 8 years now, variety of different topics such as research and development, income tax, tax planning, startups. They're always very popular. And more recently, we've been doing these surgeries centered around COVID and the business support that's available for businesses from the government. Unfortunately, at the start of the pandemic, we had to bring our surgeries online. Prior to that, you used to be able to just drop in at any point without an appointment, etc. So we've reformatted the surgeries. They're booked out in half-hour slots so that we know how many advisors we need to take part in the surgeries. So you can book a slot for 9:30, 10, 10:30 or 11, and we aim to get the surgeries finished around 11:30. Topic for the next surgery in January is tax returns, with a nod towards the impending tax return deadline of 31st of January. But today we're going to be talking about COVID and coronavirus business support. It's quite extraordinary, the amount of support that the government have made available for businesses. They've certainly thrown a lot of money at many businesses, many sectors. There are some that have fallen through the gaps, and it's hoped that with some of the things that have happened recently, and in particular the supermarkets handing back many of the rates reliefs that they've been given during this period, many commentators are hoping that that money, and it's several millions of pounds, is aimed at the self-employed people and also the employees that missed out on the first tranche of furlough. So fingers crossed in that respect. So first thing I wanted to talk about is the local restrictions support grants. These are grants that are provided by the local authorities, and they're aimed at businesses that have been forced to close as a result of lockdown or being in tier 3 since lockdown ended last week. So really, we're talking about non-essential retail, leisure, personal care, hair, beauty, etc., sports facilities, and I suppose the big one is hospitality businesses. There are cash grants available for every 14 days that a business is forced to close, and it's aimed at businesses that are within the business rates regime. You don't actually have to be paying rates because many businesses qualify for small business rates relief, but you do have to physically receive a rates bill, albeit that it may have been discounted to zero. The amounts of the grants are perhaps less generous than some of the grants we saw earlier in the pandemic. So for example, if your business's premises rateable value is under 15k, and these are the businesses that qualify for small business rates relief typically, then you'll be getting £667 per fortnight. If the rateable value is between 15 and 51k, then you're getting £1,000 per fortnight. And again, typically these are the businesses that received a £10,000 grant early on in the pandemic. And finally, if your rateable value is above 51k, you'll be qualifying for £1,500 per fortnight. And what you need to do is go onto your local authority's website and just search for local restrictions support grants closed. And it's obviously the council that you pay your business rates to. There's obviously a lot of businesses that will slip through the gaps in that respect. So the government have also made money available in the form of an additional restrictions grant fund. These grants are discretionary and each council is doing it slightly different, but it's basically, most of the authorities are aiming this relief at businesses that have been forced to close but aren't within the rates regime. So they may be in serviced offices, for example, or they're able to remain open but have been severely impacted by the COVID. So perhaps they are suppliers into the retail, hospitality, or leisure sectors. Maybe they operate in the event sector. And again, you need to go to your local council website to see how much the grants are in your particular area. Another really popular in terms of its usage scheme is the job retention scheme, otherwise known as furlough. Now this was starting to be wound down, and we thought it was going to end and be replaced by the job support scheme. But fortunately, in my opinion, it has been extended to the 31st of March 2021, and it has been open to employers and employees that didn't previously qualify for the scheme. So in a nutshell, any staff that you need to furlough because there isn't enough work for them as a result of COVID, the government will pay 80% of their wages, not their pensions and not their employers' NI, just the gross wages. There is a cap of £2,500 per month. They can be flexibly furloughed. So if you have enough work for 3 days a week, for example, you can employ them and pay them in full for 3/5 of the normal salary, and then furlough them for 2/5, and the government will pay 80% of that part of the wages. As I said earlier, it is open to new employees that weren't furloughed under the old job retention scheme, but they must have been employed by you on the 30th of October, not the 31st, the 30th. Government are going to be reviewing this in January, so I suspect what they may do is reduce the 80% down to 70%, or perhaps even lower, depending on, I guess, the progress or the success of the vaccination programme. Another important twist to the new job retention scheme is that HMRC have said they are going to publish a list of all of the employers stroke businesses that are accessing the scheme from 1st of December. And I suppose this is an attempt to try and reduce the number of fraudulent claims that are being made. So that scheme applies to employers, but what about the self-employed? So these are businesses that are operating on a self-employed basis, not through a limited company. The self-employed income support scheme came along fairly shortly after the start of the furlough scheme, and it pays 80% of a self-employed person's average profits for a particular period. So claims 1 and 2 have finished now. If you've missed out on those claims, unfortunately, you can't make a retrospective claim, but what you can do is claim for the third grant. These claims started going live on the 30th of November. Claimants were encouraged to go onto the HMRC website on the 30th of November, and then they were given a date from which they can apply. The third grant covers the period November to January. It's capped at £7,500. It's paid in one lump sum. You've got to be still impacted by COVID. So, whether that be a drop in turnover, a drop in profit. If you've ceased to trade because of COVID, you need to be confident that you're going to restart, because if you don't restart, you have to pay the grants back. And HMRC have already started chasing some self-employed people that have claimed the grant because they suspect they have actually ceased to trade. And it's the same regulations as previously in terms of those that can apply. So if you didn't qualify for grants 1 and 2, unfortunately you won't qualify for grant 3. I suppose the biggest box that you need to tick in this respect is that you must have filed an 1819 tax return by the 23rd of April 2020. And just a reminder that these grants are taxable, so you will need to show them as income on your 2021 tax return. And all of the previous grants that I've mentioned also are taxable, whether it be on the self-employed individual or the limited company that's made the claim. So they're the grants that are currently available, or some of them. There's a couple more that I'll mention shortly. So what about loans, funding, etc.? I suppose the two most common ones are CBILS, which is the Coronavirus Business Interruption Loan Scheme, and also the Bounce Back Scheme, which is a smaller loan, easier to claim. You basically just log on to your online banking, answer a few questions. You may need to upload some financial information, but typically with a bounce back loan, you can sort of get an answer within 30, 45 minutes, and often the money hits the account the next day. You have to jump through a few more hoops for the CBILS, with them being larger loans, etc. But both schemes, you can the government pays the interest for the first 12 months. There's no capital repayments for the first 12 months. And then after 12 months, the repayments start, or you can actually repay the loan in full without penalty. So you've enjoyed the benefit of a cash boost free of charge, effectively. There's no personal guarantees needed on the business bounce back loan, but there may be personal guarantees needed on the CBILS loans if the amount of the loan is 250k or above. So many businesses accessing the CBILS scheme have been applying for 249,000 or less for obvious reasons. The CBILS scheme's open until 31st of January 2021. And I suppose a lot of businesses have been accessing these funds either because they need them, or there is a concern that if coronavirus drags on, they may need them in the foreseeable future. And it would certainly make sense to apply for this funding before the schemes end, because you don't want to be subsequently wishing that you had, but it's perhaps a little bit too late. One of the concerns from many commentators was the sort of back end of Q1 2021, when these CBILS or bounce backs become repayable. Businesses that may have deferred tax liabilities at the start of the pandemic, these are going to be falling due as well. You know, is this going to cause a cash flow problem for large numbers of businesses? And in response to that, the government have announced that if you are still struggling when your first CBILS or bounce back repayment is payable, you can apply to go over to interest only payments rather than capital and interest. We've spoken to a couple of the banks about this, and they don't actually know the mechanics of this yet, so I guess watch this space. To access the CBILS or the bounce back loans, you have to have a track record of trading. You need to be able to demonstrate that you will return back to profitability after coronavirus, and also you will have the means to repay the money. Now, if you're a startup, that might be difficult, particularly if you're pre-income or pre-profit. So as a result of that, the government announced a fund very similar to CBILS and bounce back loans. It's called the Coronavirus Future Fund. This basically has to be match funded by equity funders. I'm not sure if this has been as popular and as well accessed as the previous two funds that I've mentioned, but it's certainly something to think about if you don't qualify for the other two schemes as a result of the, where you are in your business cycle. Next thing I wanted to talk about was VAT. So early on in the pandemic, businesses that were struggling to pay their first VAT payment during lockdown were given the opportunity to defer this until March 2021. Again, on the back of concerns about businesses having cash flow problems at this point in time, the government have recently introduced a new scheme whereby you can actually pay that quarter's VAT over a period of up to 11 or 12 monthly payments. And that's without interest and without any surcharge penalties. Now, you've got to opt into this scheme yourself. Your agent or your accountant isn't able to do this. The same goes for the self-employed income support scheme that I mentioned earlier. Hasn't gone live yet, so I suppose watch this space, but there are a couple of things you can do prior to the scheme going live in order to get ready for this. You need to make sure you've got a government gateway set up, so you can have a look on hmrc.gov.uk to see how you do that, but also make sure that any outstanding VAT returns are filed. If you don't do that, you won't be allowed to defer your VAT payments as easily. We're nearly there now. Next thing I wanted to talk about was sick pay funding. So if you have staff that you've been paying statutory sick pay to as a result of coronavirus, then you may be able to have this funded by the government. If you search sick pay funding on gov.uk or click on the link below, you'll be able to find out how to do that. And this document will be getting uploaded to our blog on Monday. So you'll be able to click on all the links and find out more information on all of these things that I'm talking about then. Business rates holiday. This was another initiative that was announced very early in lockdown 1. So basically, businesses in retail, hospitality, leisure don't have to pay business rates in the year to 5th of April 2021. Now this relief should be automatic. So if you received your rates bill early in the pandemic, you should effectively receive a credit note shortly after. If you haven't, you probably need to investigate, but also just double check that your sector, as highlighted on your last year's rates bill, is marked down as retail, hospitality or leisure. If it's marked down as something else incorrectly, then it may be that the council haven't spotted the fact that you qualify for the rates holiday. So just a little section on LEP grants. LEP is Local Enterprise Partnership. There's lots of LEP areas spread across the UK. Certainly Hull and Humber is within a LEP area. They've had a variety of different grants available during the pandemic. Early on in the Humber area, there was one for businesses that needed to buy IT equipment to enable their teams to work from home. That money was sort of fully utilised fairly early on. The funding now is more focused on sort of strategy, financial planning, looking at working with consultants, business advisors, accountants to get your business ready to take advantage of opportunities post-pandemic, but also to make sure that you survive any issues that you may be experiencing currently. If you go to your local LEP's website, there'll be more information on the particular types of funding they have available in your particular area. Just a reminder that if you're operating in the hospitality, hotel, holiday accommodation, and also attractions, leisure parks, etc., sectors, then you can reduce the amount of the rate of VAT that you're charging your customers. That was due to end in January, but it's now been extended to the 31st of March next year. Just a reminder, really, that this reduction is to help the businesses. It's not really intended to be passed on to the customers. It's to help you. So, you know, we're often asked, should I be dropping my prices to reflect the drop in the VAT rate? The answer to that is you can, if you think you know, if you think it will attract extra customers and you need extra customers during this period, but you don't have to. So I suppose that's if you haven't already had that discussion, that's a discussion to have with your advisor, with your accountant. Three choices really: leave your prices as they are and keep the VAT saving, drop the prices and pass all of the saving on to the customer, or maybe meet in the middle somewhere. The next initiative is quite hot off the press. This was only announced last week. Pubs in Tier 2 are allowed to open, provided they're providing a substantial meal with the alcoholic beverages. Not all pubs provide food, so many pubs are remaining closed, despite the fact that they're only in Tier 2. So the government have introduced a new £1,000 Christmas grant for any such pubs. So these pubs would presumably be applying for one of the grants that I've mentioned previously, but they'll be able to claim an extra £1,000 to help them through the Christmas period. Some of the local authorities, for example, the East Riding, are really on the ball in this respect, and there's already mention of it on their websites and how to apply. I'm sure the other councils will catch up in the very near future. With regards to personal tax, self-assessment tax, again, very early on in the pandemic, they announced that if you had a payment on account to make on the 31st of July 2020 and you couldn't afford to pay it because of coronavirus, you could defer it until the 31st of January 2021. Also need to bear in mind that if your income in the year to 5th of April 2021 is reduced, after taking into account any grants that you've received, then you may be able to reduce your payments on account anyway. So again, go to hmrc.gov.uk to explore any of those particular options. Last two things we're going to talk about in today's Saturday Surgery are the government's interest-free redundancy payments loan. So often when businesses need to make redundancies, it can be a very expensive process, and it can actually tip some businesses over the edge. You know, if they need to make 50% of their team redundant, but there's enough work for the other 50%, the costs of making half the workforce redundant can often mean that the business is unviable. So in those scenarios, there's this fund available where you can borrow the money from the government and repay it interest-free, basically from the profits that you're generating from the staff that remain in your team. And finally, just a reminder that if you are affected by COVID and you have a mortgage and you haven't yet asked the mortgage lender for help, it's not too late to do so. So I hope you found that useful. But keep an eye out for the document going live on our blog on Monday. That's the 7th of December. Any questions on any of these things, please feel free to give us a ring on 01482 427 360. Send us an email to help@360accountants.co.uk. Directly message us through any of our social media accounts. We're on Facebook, Twitter, LinkedIn, Instagram, or you can live chat us. Our live chat lines are open until 8 p.m. during the week, and they're also monitored on a weekend. Hope you found this useful, and I hope to see you at a future Saturday Surgery.